please allow me to introduce the panelists as you see them. Mr. Babajide Harrison, Head of Syndications and Risk Distribution at Afreximbank. And I'd also like to introduce Mr. Mohammed Diop, CEO, PETROSEN Trading and Services, Ms. Ngozi Kalu, Head of Finance and Investments at NNPC, as well as Mr. Edson Pongolola, Director of Planning and Management Control. At Sonangol, I am Tšepiso Makwetla, as I've been introduced. So the theme for this discussion is connecting markets, financing Africa's petroleum trade routes. I won't get into the framing because I think that's pretty much been done. So let me just get straight to it and ask Mr. Harrison from Afreximbank. So, just looking at Afreximbank and what it's done, it's been the engine room really for intra-Africa energy trade. But I want to talk about beyond financing. How do you solve the hidden bottlenecks that are in the system? And I'm talking about trade costs, I'm talking about customs transits, particularly in fragmented markets. There are fragmented rules and regulations. And do you have examples of those where you've had to intervene?
Okay, thank you. Afreximbank has been one of the leading voices in supporting the integration under the AFCFTA. And the brain child behind that is a united Africa is a much stronger Africa in all parameters. Now, one of the challenges that has historically been identified and is still ongoing, so let's be clear, it's not something that has been resolved. It's an ongoing process, and that is the fact that there is still not free movement of goods, services, or people across borders. What are we trying to do about it? Let's start with the movement of goods. So we're saying if you need to move things across borders, what are the challenges? Why don't we offer you a guarantee to support that? We take the risk of whatever customs duty payments, etc., that needs to be made to be done as you move goods from one country to the next. Like goods, refined products, crude, it's all the same. They're all goods. And we are actively working with various governments from a suasion perspective to sign up to a global framework on the continent that allows this free movement of goods and services. And we are backing it up with our guarantee products. So it's not just sign up to something that you're unsure of, sign up to something that Afreximbank is putting its weight behind to facilitate ongoing trade across borders.
Do you think there have been specific examples that you were able to circumvent and overcome within this realm? Because, as you say, the greater vision, I mean, when one is thinking of the AFCFTA, is that we, as a continent, will be unified, will deal with some of the big bugbears like infrastructure, etc. But for Afreximbank, within this vision of connecting markets, have you come across a situation where you had to intervene and you can look at it and say it can be done?
Yes, I think we have a few examples of that. For instance, we're facilitating, would say, an arrangement between two nations, like a nation that produces crude and a nation that has refining capacity. And we're saying, why don't we connect the two of you so that you can move crude to the refining area and then refine products back to the area where crude has been generated. And these are all little pockets of conversations that are going on. Now, I think what is important to highlight is that these things are happening. The fruits take a bit longer to come to fruition, but there are conversations that are happening today.
The seed has been planted. So let's look at Senegal, Mr. Diop. I mean, we're not just talking about dismantling barriers from finance. Let's look at how the producers themselves are preparing. So moving from discovery to first gas, how will you turn trading into pipelines and storage hubs? I'd just like to hear what capital markets are open to local investors, especially via bonds or PPPs.
Thank you so much. Good morning to my co-panelists and to the audience. Senegal has started producing oil about a year ago and a gas about the start of this year. And today, the challenges that are rising in terms of moving products in Africa and within the continent are tremendous challenges that we today need to look at from the perspective of getting the trade routes, the pipelines, and also like the infrastructure. So the biggest challenges that we see today in terms of moving the petroleum products are first of all around the funding cost. Today, this is one of the issues that we're experiencing as exporting petroleum products. And as Africans, we need to look at inner solutions like those proposed by, for example, institutions like Afreximbank, AFC. I can just take one example, which is very striking to me, as we are exporting the Sangomar brute crude in Senegal, where the operator is basically selling open account to the traders, without any guarantee to basically have payment within 30 days. And when we were actually supplying our local refinery, so when we ask for that crude oil from the operator to basically supply our local refinery, then the operator asks our local refinery some guarantees, like some SBLC,
Mm.
that with some very tough conditions. Um, you know, that just tells us basically the challenge that we're facing today in Africa, and the cost it is adding to basically getting energy out to basically our refinery, our country. So this is, and for that, basically, we need to have solutions that are within the continent. For example, as a matter of fact, within the project today, we working with Afreximbank to try to refinance the loan from like the operator, the Sangomar. I think those type of inter-African funding, inter-African integration would allow us to basically have ownership of our crude and be able to develop the trading routes. I think that's the first challenge about funding. But the next one that I would like to focus on is basically the need to develop integrated infrastructure within the continent. For example, one example I can take is Senegal, between Senegal and Mali. So Mali being landlocked, is basically all its energy supplies coming from Senegal and Cote d'Ivoire. And what we're seeing is basically the trading routes that we have is basically through like trucks. And we can see that it's definitely not optimized because it has a lot of impact on the traffic, on accidents, on the economic development and the impact that it has. So what needs to be done basically is, for African financial institutions to be able to have funding to basically develop integrated funding. So, as a matter of fact, increasing the capacity of the storage terminals. One, second is basically more investment in infrastructure like pipelines to be able to connect, our basically countries so that we can get
Okay.
trade to flow between African
So we'll
continents.
look at some of those examples later. So now let's come to you, Ms. Kalu, and we're going to talk about the real live wire experiences on the ground. You've identified yourself as a regional energy leader as NNPC. Let's talk about some of the strategic cross-border investments. We heard earlier on about the connection between Nigeria and Ghana. Just give us some of those examples and perhaps some of the challenges that you've confronted, but also some of the benefits that come out of it as a learning experience.
Thank you for that. Border, cross-border partnership is at the heart of NNPC's strategy. And because we recognize that no one country can deliver energy security in isolation. So that integrated partnership is essential. So let me give you some examples. Let me share some examples with you. We have the West African gas pipeline today, which is already in operations. And it is, it is a good example of what integrated partnership, cross-border partnership is all about. Today is a 678-kilometer gas pipeline that goes from Nigeria to Benin to Togo, all the way to Ghana. And that shows strengthening our role as a regional hub. Then we have the African Atlantic gas pipeline, which was originally Nigeria-Morocco gas pipeline. Okay, and it is being promoted by Nigeria and Morocco. Nigeria represented by NNPC and Morocco by ONIM. It's a 6,900-kilometer gas pipeline that goes from Nigeria all the way through the Atlantic route to Morocco, and the intention is for it to get up to Europe. And because of the length of the pipeline and the cost, is going to be executed in phases. It's going to be executed and financed in phases, about 4 phases of it. And we have signed MOUs with the ECOWAS country, the 12 ECOWAS countries, and we're about to sign the intergovernmental agreement, okay, to ensure that this goes on. And another thing we are also doing, because a lot of times you put up these infrastructures and you forget the feed gas. We are talking with the gas producers to ensure that we have that agreement signed off, that they're going to produce the gas that will be fed into this, and making sure that we have the gas supply agreements in place, the GTAs, which is going to be what we are going to use to securitize this loan when it is taken to build them, to build the pipeline, and to also ensure that the landlocked countries around that neighborhood is not also missed out. They are also going to be connected to that to the pipeline through spur lines. The 3 landlocked countries will also be connected to that. There's another one, the Trans-Saharan gas pipeline, and this is also being promoted by other national oil companies in Niger and Algeria. And this goes from Nigeria to Niger to Algeria, and it ends up at Algeria, where it then ties into an existing gas export system that then goes to the Mediterranean. And this is a kind of partnership that is also welcomed, where the national oil companies come together to develop this kind of infrastructure. And the strategic value there is reduced risks for us. There's going to be that investor confidence that is built, and of course, predictable markets.
No. So, Mr. Harrison, I see you're nodding your head, and there's some things you want to add to it. I'll allow you an opportunity to do that. So, I want to just really move from the financing models, but I'm sure it's part of that. There's politics and border constrictions that can sometimes derail projects. And I want to talk about Sonangol now. Mr. Pongolola, you are turning 50 as a company next year, and you've just recently undertaken reform. So Is it frictionless, this idea, this agenda of an intra-African trade agenda, or is it mythical in terms of the reality of it from Angola's perspective, what you've recently undertaken? You are now focused squarely on oil and gas, but has it been seamless, particularly pursuing the legal and the political hurdles?
Well, thank you, Tšepiso. Thank you for my fellow panelists. Good morning to everybody. From Senegal point of view, I mean, the country is going to be 50 years in November in terms of independence. And Senegal, 3 months later, is going to be 50 years old. We're celebrating our Golden Jubilee. And there's 50 years have been marked by investments and operations to bring Angola into what we call independence in terms of energy and electricity. And it's the idea behind promoting self-sufficiency that forces us to look at Senegal as the integrated oil and gas company, the backbone of the national development. And over the past 50 years, we have had in the country I'll call the best or the top companies operating, working with us within our environment. And that it's a proof of the confidence where the legal framework and all the political agenda is well organized and protective of the investment from other companies. So what Senegal is doing, over the 50 years, we've played, 45, we've played multiple roles. We have been the concessionaire, the operator, and the finance company. It was until 2018, 2019, where we split as a result of the reforms that took place in Angola. We split the concessionaire role that was transferred to NNPC, and also the regulator for the downstream transferred to IRDP. And now Senegal is a, I'll say, fully integrated oil and gas company operating from the upstream, from a well to the petrol station, where we have at the moment participations or presence in, say, 41 concessions in the upstream, where we operate 11. But we not only have that, we invest in gas and renewables as part of one of the business we've introduced the renewables bit to our value chain in order to anticipate the current trends of transition, but that to prove the fact that for us, the transition, the idea behind the transition has to do with promoting decarbonization and integrating the oil and gas value chain. We invested in storage facilities in Angola, and we just recently inaugurated our biggest storage facility, the Barajudande Oceanic Terminal, with a 582 cubic meters of storage facility capacity. That's not only open for Senegal and for Angolas, but it's open for other interested parties to store the products in Angola and export to other parts of the continent. And also we have investments, which is more important today, is the fact that we're still a country that depends roughly 69 to 70% on imports of refined products. We produce, as a country, produce roughly 1 million barrels per day. And out of that 1 million barrels per day produced, we only transform or process locally 51 to 65,000 barrels per day. Like the total production is exported to other countries out of Africa, and we have to import refined products, so we depend on that. The fact that we don't have refining capacity in the continent, we have to export crude oil to Europe, Asia, and America. But we buy refined products from those countries to Angola, and that's pretty much what happens to other countries in Africa.
Okay.
So the fact that we're building the refining capacity is a response to the needs to promote the continent, Angola and the continent self-sufficiency in terms of refining products, in order for us to not only process what we produce, but also to produce refined products to promote local and continental, to meet continental demand and export excess capacity.
So this is the question I'm going to bring around, but
Okay, good.
I want to stay with you. I mean, you're positioning yourself as the chief continental energy producer. So I want to look at now bankability. What are you saying to investors, both locally and internationally, especially about cross-border risks? How are you sharing that burden in your financial model? Are you coming up with anything that is unique that will even want to draw in the smaller players, local players?
Well, the fact that we have in country the top international companies for decades working with us, the proof that the framework is there. We at Southern Gold, for instance, we have been having the ability to meet financial institutions' demand in terms of paying back the loans we're getting. But still, times have changed and the situations have improved quite a lot. And in the past, say, few years, the transition bid has brought a new complexity into the agenda, of course. But the fact that we prove that we produce and we venture into cleaner energies, it's been a proof that we're not only a sustainable company, a sustainable energy company, but we have the ability to pay back what we get. So smaller companies can also invest in Angola, of course. I mean, the oil and gas industry is a risky industry, of course, but no, it's one of those industries that pays back, like the guarantees the return on investments in any way, in any case. Some of the parts of the business are more complex than others. I mean, for instance, refinery bits is more risky, but there's demand, there's market for it. So the market pays back what the producers manage to produce. But most of the companies that come to Angola, they're more interested in investing in the upstream sector. But we do invite them all to invest throughout the value chain, through storage. We invest in storage, refining, because there's markets in Angola, there's a market in Africa. And all of African countries, they tend to pay back the refined products in a stronger currency, so to say. And we import refined products, we pay back with a stronger currency. So there's markets, and the market pays back. Okay. We do have to meet what the financial institutions demand. What we keep asking the banks, and we've been dealing with Afreximbank for quite some time, is for them to, I'm not going to say facilitate, but to give more opportunities and models of financing projects. But there's a proof that the market and the industry does pay back, and there's a commitment to do that, and the projects prove that.
So you've really done the job for me. You're segueing back to Mr. Harrison. Mr. Harrison, you're the lead syndicator. What is your response to that? And also just in terms of long-term systemic risk and internal rates of return, what are you saying to clients? What are you saying particularly to those in the north who are pulling out their funding?
See, Africa is open for business. Oil and gas in Africa is growing. And I think there's a collective support from the countries and the continents, which I think eclipses whatever headwinds that are coming from outside the continent, from a sustainability, from a climate challenge perspective. But I want us to just, if you indulge me a little bit, I want us to try and just put a flavor to the trade routes, the petroleum trade routes, and the history behind it, just very quickly. The trade routes were originally designed to take crude out and to bring refined products back. That's what it was designed for. So if you look at what we have, the Atlantic basin that you spoke to earlier, the whole of the Gulf of Guinea was designed to get goods out to Asia, to Europe, done. The gas from the north, designed to go to Italy, Spain, and to feed Europe. East Africa, similarly, Asia, China, and Southeast Asia are the core markets. South Africa was really to just then bring in refined products, to feed the South African market. That was the design. Now, what we are here to do is to change that paradigm, right? Just a few numbers. Africa produces circa 10 million barrels of crude per day, right? But we also import circa 5 million barrels of refined products per day. If you layer those two things together, then what you have is we are in effect selling one, bringing 0.5 plus the cost of transportation to take it out to bring it back, and the cost of everything else associated with the refined products. We are losing all the time. Now, changing that paradigm requires us to first, to Ngozi's point, is develop the capacity to increase production. We need, you speak to sustainability, that is the sustainability. Do we have the goods? Let's increase capacity to develop the goods. Afreximbank is at the front and center of that. We never stopped financing the oil and gas industry. We never stopped financing liquid molecules, and now we're fully into supporting gas molecules. Build the feedstock. The next step is, how do you now move the feedstock? You need to move it from areas of surplus to areas of deficit, from areas of supply to areas of demand. This is the whole pipeline structures that we've been speaking to. Now, we need to develop those pipelines to not only get us from, because we still need to export, we need the dollars, the euros, we need that. We still need to export, but what we need more is to ensure that we service the continent first. So along the backbone that takes us from production center to external markets, then we now have branch outs that feed the local markets. I give an example. There is the Angola, Zambia oil pipeline that is now meant to connect an area of production, Angola, to an area of serious deficit, which is Zambia, whose means of energy today involve trucking, rail, and quite expensive old pipeline infrastructure. So second step. Third, we do, as everything else, have periods where things shut down for small, long periods, short periods, whatever the case may be. We often hear in the West and in Asia, stockpiling. People stockpile, they call it strategic reserves of crude, of refined products. So if whatever happens in the world, they keep moving. Where is it in Africa? So we also now have to develop those capacities to build storage, to have storage hubs, right? Logistic storage hubs for what we'll call critical energy infrastructure. We understand there's something coming up in Walvis Bay. Edison, you just spoke to something in Angola now. We need more of those as well. And I think with that context in mind, you can see where the direction is pushing to now. It's looking inwards, not in the way that has been suggested by some countries recently, but looking inwards to satisfy Africa's demand. There is massive demand on this continent. So let's satisfy that demand, and we can produce the surplus to go outside.
So, Mr. Diop, the question then is how Senegal is approaching it. There is legacy projects versus new projects and the cost to it, the return of investments. Some say, just looking at the scale, is it worth it revitalizing some have called it dinosaur projects? What is Senegal doing, and how are you handling that in terms of the financing models that you have in place? In some cases, they said the problem is that people are selling future oil barrels in their deals to justify the costs.
Right. I just want to start from where my colleague left off in terms of like insisting on the need of revamping infrastructure. I just want to take the case of SAR, which is our national refinery, which was built in 1961. And when we discovered oil in Sangomar, so what we've come to realize is that our refinery was not equipped to basically treat the grade, and just try to put like a finger on the cost of how much it costs us. So basically, we're exporting the oil and bringing back refined product. And oftentimes, what we see is that like the cost of bringing back refining product is actually multiplied using Africa because there's a lack of infrastructure. One example I want to take is the LPG infrastructure that we have, for example, in the West Africa region, where the capacity of reception is so low that we have to bring some smaller ships, and all that combined with the cost of funding is basically increasing the cost of petroleum product and the cost of energy to the African continent. So it is critical that we realize and we go about like increasing the infrastructure capacity. And in Senegal, basically, that's where we're doing. So we have a new port, which is called the port of Barni Sendou, which basically is going to increase the total storage capacity by 40% going to next year. Um, and also because we realize that without building those infrastructure, it's going to be very hard to reduce the cost and have access to energy. And that's really something that we're really insisting on. Um, the second point that is really important for us too is basically the need for in the African continent to build like pipeline networks. And for that, the role of institutions like Afreximbank, the African Development Bank, are going to be instrumental. We have to go at this stage. We have to go to from thinking about project from a national perspective when it comes to energy, to now thinking about project on an integrated basis. So, the African Atlantic Pipeline project that my colleague from NNPC mentioned is one of for importance. But we also need to think regionally about how to integrate the investment that needs to be done in terms of the petroleum product, because to me that's one of the most important lever that we have in terms of reducing the costs and having large access and affordable access to of energy to the African continent.
So, Ms. Kalu, what would you say in reply to some of what's already been mentioned, but also looking inward from an NNPC perspective? Are we moving away from crude-backed loans, and what is it to currency hedging? We've heard about sovereign wealth funds, pension funds. What are some of the successful partnership models that you've seen in helping improve and increase capacity?
Thank you for that. Let me let me start by correcting a misconception that is out there in the market, that all our financing is all about crude backed. This is not actually how it is. Before now, we went into financing, and we're into oil and gas. And to produce um, these assets, to develop the assets, you need to invest in them, okay? And then the financing is structured in a way that what comes out of it is ring fenced to pay back the loan. So, and what is going to come out of there? It's going to be oil and gas. So there were projects that were all about putting incremental production, not backing with existing production. That said, at the time that we did some of the crude-backed financing, you find out that at that time it was actually novel and a lifesaver. As a company, you find yourself, you need to meet some commitments, and you need to do that. But we have realized that it is actually eroding value for us. And so we are still going, our focus is to add to production. And so we're still going to do that project financing where you're going to develop the assets and of course, pay back with the cash flows from the asset. And so you're going to be seeing it as crude because you have to sell the crude that is coming out from there. In addition, we are looking at securitizing cash, the revenues that come from tariffs, from our gas, existing gas transportation agreement. We actually have a financing in the market right now, where infrastructure financing, where it is securitized by using our existing cash flows from our gas transportation agreements, and then when the projects, because we had already progressed most of the projects to certain levels, so when they are developed and working, then we are also going to add the cash flows from the projects to support that, and that gives lenders that confidence. We also have, we can also use gas power tariffs for the IPPs that we want to develop along the corridor of a pipeline that we are also constructing in the project that I just talked about. So that is also an option. We're looking at, we could do infrastructure bond. We are open to ECA financing like we did for NLNG Train 7. There's the pension fund today that we could actually refinance. They are averse to risk. So what we could do is refinance that, and then it's what happens is then we can then free up some money and then put into our business when they take that up. And then there's the build, operate, transfer model, which we're doing now for our national assets, over 5,000 kilometer pipeline. So we're in partnership, we are in agreement with 4 partners that would actually take them in segments and build them, operate them, and return them back to us. And we also have funding technical services agreement that we're
All right.
also
Ms. Kalu,
doing at this time.
allow me to stop you there because we are running out of time, because I need to ask a final question to Mr. Pongololo. If you can, very briefly, diversification of your revenue base, especially in non-oil products. How are you doing that? Very briefly. And if you can, also just give us a 30 seconds final comment from you.
Sure. So, we've done a while ago. I mean, we used to have investments in different sort of business segments. What we did, we actually divested from non-core businesses. What we are integrating at the moment, we're not integrating non-core business. We focus on oil and gas value chain, but we bring in 2 sets of new segments, which is the renewable bit, and of course what we call the critical or strategic minerals. But we're doing that in a sense of creating investment to support the energy industry. And because we've built 2 years ago our first PV plant, and we intend to increase the PV plant to produce solar power. And with that, we're still a country and a continent dependent on imports in terms of solar panels and everything. What we're doing, we have acquired like 7 concessions of lithium, quartz, and uranium in order to produce the necessary resources to produce solar panels to invest in these sort of segments. So we're not investing in non-core businesses. We divested from the financial business we had, like other areas and even services. But we focus in the service that supports the oil and gas industry in general. So we have, as I've mentioned, we even have logistics space that serve Angola and other major companies. We're in process of investing or extending logistics space to Namibia, which is still part of our value chain in terms of supporting activities. But bringing these new subsegments will be really doing that.
For 30 seconds,
Yes.
all of you, what can we do to make sure that pipelines don't stop at borders? Your 30 seconds begins now.
We'll come together more often, like with this conversation, understand each country's needs, its companies' sort of agendas and strategies, and align strategies. What I mean is align strategy and join forces to make sure that the infrastructure meets the current and future demands.
Ms. Kalu, your 30 seconds.
Okay, I'll say Africa must connect its markets with African solutions, and we can leverage on our own resources and collaborate more, and we'll be able to build the Africa that is resilient and is also that will be able to integrate more and make sure that our energy security is achieved.
Mr. Diop?
I would say for me, integration is key to developing pipeline and developing infrastructure within inter-African. In the West Africa region, for example, the WAMU zone, we have a market, integrated market. So what we have not done is to leverage what we have in terms of funding. So let's integrate pipeline, but also let's look at into our African savings to finance our African infrastructure. It is there. We haven't explored it, but this is, to me, the way to go for getting that gap.
In your 30 seconds, Mr. Hatem?
Standardization. If NOCs, governments can agree to standardize infrastructure in a manner that even if it resides within their national borders, there's the potential and the ability for it to be connected because they speak to each other. And standardization goes across both pipelines, products, etc. For instance, you have sulfur content of even refined products in Africa of different, ppms, from as high as 1,000 to as low as 50. We need to speak to each other as African countries and have, as best as possible, standards that allow us to integrate as and when the opportunities come.
I think to wrap it up, it's fair to say that as much as we began about the money, it's about not only financing Africa's petroleum trade routes, but we mustn't look only abroad. Internally, it must be powered by African savings, African funds, and African ambitions. Thank you very much to my panelists, Mr. Babajide Harrison from Afreximbank, Mr. Mohammed Diop from PETROSEN, Ms. Ngozi Kalu from NNPC, and Mr. Edson Pongolola from Sonangol. Thank you very much.